ParthKuchana.com, complete fundamental and technical analysis of stocks and other financial industry updates. Hello, welcome to Partha Kuchana Finance channel. This video provides complete fundamental analysis of Bharti Airtel Ltd Bharti Airtel stock. Disclaimer: this analysis is for educational purpose only. This is not financial or investment advice. Make financial and investment decisions on your own. Valuation. Let's focus on assessing return on capital, equity efficiency, overall pros and cons, and valuation and calculation of key ratios and interpret them. This is based on market cap, current price, high-low, ROCE, ROE, pay ratio, book value, face value, financial ratios data. Return on capital employed, ROCE. Bharti Airtel's ROCE has improved from 7% in March 2013 to 13% in March 2024. This suggests a more efficient use of capital in generating profits over the years. A ROCE of 13% is competitive, especially when compared to industry averages, indicating good capital utilization. Return on equity, ROE. The ROE has shown a positive trend, rising from 11.3% in previous years to 14.9%. This reflects the company's growing ability to generate profits from shareholders' equity. The improvement in ROE signals enhanced operational efficiency and profitability. Price to earnings, PE, ratio. Bharti Airtel's PE ratio stands at 73.4, which is relatively high. This suggests that the stock is trading at a premium relative to its earnings. High PE ratios can imply strong future growth expectations or overvaluation. Investors should assess whether the company's growth prospects justify this high valuation. Book value. The book value of 145 rupee per share compared to the current price of 1,466 rupees indicates that the stock is trading at a significant premium, approximately 10.1 times its book value. This high premium might be justified by the company's growth prospects but also suggests potential overvaluation. Face value. The face value of 5 rupee per share is relatively low, which is typical in the industry. It does not directly impact valuation but is important for understanding the stock's nominal value. Pros. Healthy dividend payout. The company maintains a healthy dividend payout ratio of 42.8%, which is attractive for income-focused investors. Strong ROCE and ROE. Positive and improving ROCE and ROE metrics indicate effective capital utilization and profitability. Cons. High PE ratio. The high PE ratio of 73.4 suggests that the stock is expensive relative to its earnings, which could imply overvaluation. High price-to-book ratio. Trading at 10.1 times its book value may indicate that the stock is overvalued, requiring careful consideration of future growth prospects. Low interest coverage ratio. The company's low interest coverage ratio indicates potential challenges in covering interest expenses, which could affect financial stability. Conclusion: Bharti Airtel demonstrates strong profitability and capital efficiency with improving ROCE and ROE. However, the high PE and price-to-book ratios suggest that the stock is currently trading at a premium. Investors should weigh the company's solid dividend payout and operational efficiency against potential valuation concerns. Financial health. Let us focus on financial health and leverage analysis. Review asset and liability management and equity changes. This is done focusing on assets, liabilities, equity, key metrics from the balance sheet over the last several quarters. Financial health and leverage analysis of Bharti Airtel. Assets and liabilities. Bharti Airtel's total assets and liabilities have shown significant fluctuations over the past decade. The company's total assets have generally increased, peaking at 444,557 crores rupees in March 2024. This rise indicates ongoing investments in infrastructure and other growth initiatives. However, the total liabilities have also increased, reaching 442,019 crores rupees in March 2024, which suggests rising debt levels. Equity. Equity capital has been consistently growing from 1,899 crores rupees in March 2013 to 2,877 crores rupees in March 2024. This steady increase reflects a solid base of shareholder capital and suggests that the company is able to retain and reinvest earnings effectively. Key metrics. Borrowings. Borrowings have seen a steep rise from 66,736 crores rupees in March 2013 to 215,592 crores rupees in March 2024. This sharp increase indicates higher leverage, which could potentially impact the company's financial stability and interest obligations. Fixed assets. Fixed assets have grown substantially from 1,25,674 crores rupees in March 2013 to 303,303 crores rupees in March 2024. This increase reflects ongoing investment in infrastructure and capital expenditure. Investments. Investments have also risen, reaching 31,602 crores rupees in March 2024. Up from 7,710 crores rupees in March 2013. This growth signifies an expanding portfolio and possibly a strategic push into new opportunities. Other assets have shown considerable growth, peaking at 90,210 crores rupees in March 2024. This category's rise suggests a diversification of asset types and potential accumulation of various assets. Leverage and asset management. The significant increase in borrowings relative to equity and assets suggests that Bharti Airtel is leveraging debt to finance its expansion. While this approach can fuel growth, it also increases financial risk, especially if the company faces challenges in generating sufficient cash flows to meet its obligations. Overall, Bharti Airtel's financial health shows robust asset growth and increasing equity, but the rising debt levels warrant close monitoring to ensure that the company can manage its leverage effectively without compromising its financial stability. Cash flows from financing activities. Now let's look at the trend and interpretation of cash from operating activities, cash from investing activities, cash from financing activities, net cash flow. This is done focusing on cash flow data over the last several quarters. Trend and interpretation. Cash from operating activities. Trend. There has been a general upward trend in cash from operating activities from March 2013 to March 2024. This indicates that the core operational efficiency of Bharti Airtel has improved over the years. Interpretation. The significant increase in cash from operating activities, especially from March 2020 onwards, suggests stronger operational performance and possibly better management of working capital. Cash from investing activities. Trend. Cash from investing activities has consistently been negative, with increasing outflows over the years, reaching a notable -51,089 in March 2024. Interpretation. The growing negative cash flow from investing activities indicates high capital expenditures, likely for network expansion or technological upgrades. This could signal aggressive growth strategies or heavy investment in infrastructure. Cash from financing activities. Trend. Cash flows from financing activities have shown volatility, with significant fluctuations from positive to negative values. Interpretation. The large swings in financing cash flow, including substantial inflows and outflows, reflect the company's varying financing needs and strategies. The negative cash flow in recent years could indicate higher debt repayments or reduced financing activities. Net cash flow. Trend. Net cash flow shows high variability, with some years of positive cash flow and others of negative. The most recent year, March 2024, shows a minimal positive net cash flow of 31. Interpretation. The inconsistent net cash flow suggests that while the company has improved operational cash generation, it faces challenges in balancing investment and financing activities. The positive cash flow in March 2024, although modest, is a positive sign amidst the recent variability. Pros and cons. Pros. Strong upward trend in cash from operating activities reflects improved core business performance. Positive net cash flow in the most recent year indicates some improvement in overall cash management. Cons: persistent negative cash flows from investing activities may suggest high capital expenditures, which could be a strain on resources if not well managed. Volatility in financing activities might indicate instability in funding strategies or high dependence on external financing. Conclusion: Bharti Airtel's cash flow analysis reveals a company that has shown growth in operational efficiency, evidenced by increasing cash from operating activities. However, the substantial outflows in investing activities and fluctuations in financing cash flows highlight areas of concern. While recent improvements in net cash flow are encouraging, the company must address the volatility in its financing activities and manage its capital expenditures prudently to ensure sustainable growth and financial stability. Revenue trends, profit margins, expense management. Let us now focus on revenue trends such as growth or decline, seasonality. Profit margins, like gross profit margin, operating profit margin, net profit margin, and expense management. Revenue trends. Bharti Airtel has demonstrated a consistent increase in sales over the past decade, from 76,947 crores rupees in FY 2013 to 151,049 crores rupees in FY 2024. This upward trajectory highlights a strong revenue growth trend, indicating robust market performance and expanding business operations. The sales growth has been relatively steady with occasional fluctuations, suggesting effective market strategies despite external challenges. Profit margins. The operating profit margin, OPM, has improved significantly, rising from 30% in FY 2013 to 52% in FY 2024. This increase reflects enhanced operational efficiency and cost management. The net profit margin has also improved notably, from 2.95% in FY 2013 to 7.58% in FY 2024. These margins indicate effective management of costs and improved profitability. Expense management. Operating expenses have increased from 53,987 crores rupees in FY 2013 to 72,648 crores rupees in FY 2024. But the rise in sales has outpaced the growth in expenses, resulting in better profit margins. Cost of goods sold, COGS, as a percentage of sales appears to be well managed, contributing positively to the profitability. Earnings before interest and taxes, EBIT, and earnings per share, EPS. EBIT has shown a consistent increase from 22,960 crores rupees in FY 2013 to 78,401 crores rupees in FY 2024. This trend indicates strong operational performance and efficient expense management. EPS has also improved significantly from 4 rupees and 32 paise in FY 2013 to 17 rupees and 70 paise in FY 2024, reflecting growth in shareholder value and earnings. Profitability ratios, return on equity, ROE, and return on assets, ROA, have improved over the years, indicating efficient use of equity and assets to generate profits. This is consistent with the company's overall positive profitability trends. Exceptional items and non-recurring costs. There have been notable non-recurring costs, such as high interest expenses and exceptional losses, which impacted profitability in certain years. However, these have been managed effectively, and the company has returned to stable profit growth in recent years. Impact on company stability. Bharti Airtel's stable revenue growth, improving profit margins, and strong earnings trends suggest robust company stability. The consistent increase in sales and profitability, along with effective expense management, positions the company favorably in the market. Overall performance, growth trends, profitability, and operational efficiency. In this section, let us focus on highlighting overall performance, growth trends, profitability, and operational efficiency. Provide insights into the company's financial health and potential future outlook. This is done based on trends and growth, profitability and margins, operational efficiency, profit before and after tax, earnings per share, EPS, details from quarterly earnings reports over the past several quarters. Trends and growth. Bharti Airtel has shown consistent sales growth across the quarters, starting from 26,854 crores rupees in Q1 FY 2022 to 38,506 crores rupees in Q1 FY 2025. There is a noticeable upward trend with significant peaks, particularly in Q4 FY 2022 and Q1 FY 2024. This indicates strong market performance and robust demand for services. Profitability and margins, operating profit margins, OPM%, have generally improved, fluctuating between 48% and 53%. Notably, OPM% reached its peak of 53% in Q3 FY 2023, reflecting strong operational efficiency. The margins are relatively stable, indicating effective cost control and revenue management. Operational efficiency. Operating profit has consistently increased from 12,980 crores rupees in Q1 FY 2022 to 19,708 crores rupees in Q1 FY 2025. This trend, combined with the growth in sales, suggests improved operational efficiency. However, both expenses and depreciation have also increased, which could be attributed to expansion and investment in infrastructure. Profit before and after tax. Profit before tax has shown variability, with significant fluctuations observed in Q1 FY 2022, 1,776 crores rupees, and Q1 FY 2025, 6,025 crores rupees. The effective tax rate has varied significantly, impacting net profit. For instance, the tax rate dropped to 16% in Q4 FY 2023, boosting net profit, which was 4,226 crores rupees, before returning to higher levels in subsequent quarters. Earnings per share, EPS. EPS has experienced substantial growth, rising from 48 paise in Q1 FY 2022 to 7 rupees and 31 paise in Q1 FY 2025. This notable increase reflects improved profitability and efficient cost management, enhancing shareholder value. Conclusion: Bharti Airtel's financial performance shows a positive trajectory with robust sales growth, improved profit margins, and increasing operational efficiency. Despite some fluctuations in profit before tax and net profit, the overall trend is upward, indicating strong financial health and positive future outlook. The stable OPM% and significant EPS growth suggest effective management and a solid foundation for sustained profitability. Company stability and competitive positioning. In this section, focus is on current market price, price positioning, price to earnings ratio, PE, valuation comparison, growth expectations, market capitalization, size and stability, investor confidence, dividend yield, dividend %. Income generation, company strategy, net profit, profitability comparison, profit trends, quarterly profit variation, growth volatility performance trends, sales, revenue scale, revenue consistency, quarterly sales variation, sales growth, market trends, return on capital employed, ROCE %, efficiency and profitability comparative performance compared to peers in the same industry. Comparative financial analysis of Bharti Airtel. Current market price, CMP. Bharti Airtel's CMP is 1,465 rupees and 70 paise, which is higher than its peers such as Vodafone Idea, 15 rupees and 36 paise, and Tata Tele. MAH. 91 rupees and 65 paise, but lower than Tatacom, 1,869 rupees and 95 paise. This positions Bharti Airtel as a higher valued stock compared to some peers, reflecting market confidence in its performance and potential. Price to earnings ratio, PE. Bharti Airtel's PE ratio of 73.35 is higher than its peers, with Bharti Hexacom 87.30 and Najara Technologies 102.90 also having high PE ratios. This suggests that Bharti Airtel is valued with high growth expectations, though it also indicates potential overvaluation relative to peers with lower PE ratios, such as Railtel Corporation 56.51 and Tatacom 64.75. Market capitalization. Bharti Airtel's market cap of 876,050.62 crores rupees is significantly higher than all listed peers, reflecting its dominant position and investor confidence. This large market cap suggests that Bharti Airtel is a major player in the industry with substantial market influence. Dividend yield. Bharti Airtel has a low dividend yield of 0.55%, which is lower than peers like Tatacom, 0.89%, and RailTel Corp. 0.61%. This indicates that Bharti Airtel prioritizes reinvestment into growth over returning profits to shareholders, contrasting with peers that offer higher yields. Net profit, NPQTR. Bharti Airtel's quarterly net profit of 4,717.50 crores rupees is substantially higher than its peers, reflecting robust profitability. This strong profit position is a positive indicator of operational efficiency and market strength. Quarterly profit variation, QTR profit var %. Bharti Airtel shows a quarterly profit variation of -8.78%, indicating some volatility in earnings. This is relatively moderate compared to peers with higher variability, such as Tatacom, -28.24%, and Najara Technologies, 266.21%. High variation in profit can indicate instability, though Bharti Airtel's variation is less severe compared to others. Sales QTR. Bharti Airtel's quarterly sales of 38,506.40 crores rupees are the highest among its peers, demonstrating strong market penetration and operational scale. This indicates a leading position in terms of revenue generation within the industry. Quarterly sales variation, QTR sales var %. Bharti Airtel's sales variation of 2.85% is relatively modest compared to peers like Tatacom, 18.07%, and RailTel Corp. 19.35%. This suggests stable sales growth, though lower than some peers with higher growth rates. Return on capital employed, ROCE %. Bharti Airtel's ROCE of 13.13% is in line with the median of 13.13% and comparable to peers like Bharti Hexacom, 14.30%, and RailTel Corp. 20.25%. This indicates efficient use of capital to generate profits, though there is room for improvement compared to the highest performing peers. Impact on stability and competitive positioning. Market position. Bharti Airtel's significant market cap and high CMP reflect its strong market position and investor confidence. Valuation. The high PE ratio indicates strong growth expectations but also potential overvaluation compared to some peers. Profitability and sales. The company excels in profitability and sales compared to its peers, suggesting a robust operational performance. Dividend policy. The lower dividend yield suggests a focus on growth and reinvestment rather than immediate shareholder returns. Volatility. While showing some profit volatility, Bharti Airtel's overall performance metrics are strong, reflecting competitive positioning and financial health. In summary, Bharti Airtel demonstrates strong financial performance and market leadership, though its high valuation and dividend yield could be areas of concern. Comparing these metrics with peers provides a comprehensive view of its competitive standing and potential investment appeal. Changes in promoter, FIIs, DIIs, government, and public shareholding. In this final section, let us evaluate the company's ability to generate cash and manage its financial obligations. With focus on changes in promoter, FIIs, DIIs, government, and public shareholding with the objective of evaluating stability and investor confidence. Promoter shareholding. The promoter's shareholding has gradually decreased from 55.86% in September 2021 to 53.17% in June 2024. This consistent decline, though modest, indicates a gradual dilution of promoter control. It's essential to monitor this trend, as significant decreases might affect the stability and strategic direction of the company. Foreign institutional investors, FIIs have increased their shareholding from 19.87% in September 2021 to 24.62% in June 2024. This increase reflects growing investor confidence and interest from foreign institutions, which can be a positive signal regarding the company's market perception and potential for growth. Domestic institutional investors, DIIs have maintained a relatively stable presence, with their stakes slightly decreasing from 19.15% in September 2021 to 19.13% in June 2024. This stability suggests a steady level of domestic institutional support, which can be reassuring for overall investment stability. Government shareholding. The government's shareholding has remained negligible, consistently at 0.12% since September 2021. This lack of significant government involvement is typical for many private sector companies and does not impact the company's financial stability or management directly. Public shareholding. Public shareholding has decreased from 5.08% in September 2021 to 2.89% in June 2024. This reduction could indicate reduced public interest or lower retail investor participation, which might impact liquidity and market dynamics. Others. The category Others remains relatively insignificant, with only minor fluctuations. Evaluation of financial stability. Promoter shareholding. The gradual decline in promoter shareholding could affect control and influence but is not alarming unless it accelerates significantly. FIIs. The rising shareholding of FIIs is a positive indicator of confidence from large, sophisticated investors. DIIs. The stable DII shareholding reflects consistent domestic support. Public shareholding. The decrease in public shareholding might affect the stock's liquidity and could be a concern if it continues. Overall, the increasing FII stake and stable DII presence suggest a favorable outlook from institutional investors, while the decreasing promoter and public shares could be areas to watch. The company's financial stability and ability to manage obligations appear solid, with institutional backing supporting investor confidence. Thank you for watching. If you like this analysis, please like, share and subscribe. Also, do not forget to visit parthkuchana.com.